You're listening to The Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mike Yahoo. Hey, what's up, Market Moose? This is Mike from The Moose on the Loose. How was your weekend? Quick note on mine. It was pretty much filled. Supper with family, some soccer game, and yesterday it was all about playing with a flamethrower, an axe, and a chainsaw. So I had a lot of fun on my land. But anyways, so while I kept busy during the weekend, I hope that you had a nice one too on your side. Today I want to talk about doing nothing. Because doing nothing is doing something. And the reason why I want to touch this topic this morning is there are a lot of uncertainties right now. The market doesn't seem to want to go down, so it keeps trading at a higher and higher level. A lot of companies seems to benefit from what I call PE expansion, so they trade at a higher price, but the earnings did not follow, so the PE ratio is going up. We see that on the US market, we see that on some Canadian stocks, while the Canadian market is a little bit tougher than the US market these days, but still the TSX is up 6% as of this morning since the beginning of the year, dividend included. The S&P 500 is up almost 12%, so definitely a lot better, but still mostly driven by tech stocks, let's be honest as well. So we're still hoping that inflation is under control. We have a lot of good sign about that, but we have not seen interest rate cuts. So we are eager to hear about those. Maybe it's going to come in June. We'll see, but we'll have to wait. We have to be patient. And even if we have a rate cut, it's not going to be like, oh, the Bank of Canada is cutting down their rate by 1%. Forget that scenario. It's not going to happen. So if they cut it, maybe it's going to be 25. I don't even see a case for 0.50 right now. So probably 25 basis point will be enough. And again, most of when I look at my portfolio, it keeps going up all the time. But from time to time, we have stocks that go down because there are that uncertainties roaming. There are a lot of nervosity. And I see that investors are super scared of the market these days, and I get a lot of DMs, a lot of emails, investors are reaching out to me to tell me, oh, have you seen stock XYZ? It dropped by 8% today. What's going on? Should I sell? Is it the beginning of a crash? And we're very fast to push the panic button these days. And I wanted to show you how doing nothing and actually not riveting your eyes on the stock market daily could help you not only sleep better at night, but also generate some pretty interesting returns. So example number one, Alimentation Couche-Tard. I know I don't never talk about this one, but this one is quite interesting. So not too long ago, ATD was up at its highest level ever, up to $86, and that was before they report their first earnings quarter. They were bad news all around. The revenues didn't move that much, but earnings declined. Margins are under pressure, and there's a lot of uncertainties. And then boom, we started to see a bunch of media saying that gas stations are not sellable anymore, and that it's the end of the gasoline and car running on gasoline and a bunch of stuff. So long story short, ATD went from 86 to a bottom of roughly $74. And I looked that up this morning before the market opens, and it's trading at $80 now. So it went from 86, 74 up to 80. You know what I did during that time? Absolutely nothing. I didn't even notice that much the variation. I noticed because a bunch of investors reach out to me, say what's going on. But I'm that's a bad quarter. And that happens to everybody. Did you ever add a bad day? Well, it's the same for companies. Sometimes companies have bad quarters, and it is okay. It's normal. You just have to take a deep breath. The second example I want to show is even better. And by the way, Couche-Tard so far this year is up 3% since the beginning of the year, dividend included, even if it's small, as compared to the TSX that is up 6%. So trailing the TSX this year, has been outperforming greatly over the past few years. So we can give it a little break. But even then, even though there was a major drop and a big panic, the stock is still up 3%. So nothing to panic here. Second example, Stella-Jones. I got a lot of DMs again because the stock was trading around $80 and then it dropped suddenly to $72 not too long ago for a few days. Kind of weird, actually. And then went back up as of this morning to $85. So since the beginning of the year, Stella-Jones has generated 10.75, so almost 11% total return. So stock price appreciation plus the dividend versus a TSX at plus 6. All that to say, you're going to see stock price going up, going down, and there are a lot of movement because we are not alone investing. So there are retail investors, but there are also institutional investors, hedge funds, and then you have options and other leverage strategy. And when those companies are making big moves, that will move the market altogether. It's not like market manipulation, but if a big whale is placing a big order, of course it's going to change something. So maybe this is what happened with Stella-Jones, and I don't really know. And to be honest, I don't really care either because I review my stocks quarterly. Not before, not after. I mean, just like once every quarter. There's no point of watching the stock price going up and down, going up and down. I mean, I would lose my hair if I would still have some, but I mean, unfortunately, or unfortunately, this case has been solved a long time ago. So being bald is pretty good, probably a good thing because now I cannot lose my hair over the stock market. The last example I want to show you and want to talk about is Texas Instrument, where Texas Instrument is obviously trading on the US market under TXN, and they make analog chips. So mostly for industries and for the automotive industry as well. So it's all about industrial manufacturing plants, nothing related to AI. So yes, it's a semiconductor company, but it does not benefit from that big wave. So the stock price was pretty much dead. Last year in July of 23 was trading around $186. But after a few bad quarters where the margins were under pressure, the company was investing massively in research and development, but was not able to generate higher revenue and higher earnings, mostly because their business model is cyclical. So you have to understand that cyclical means sometimes it goes up and then sometimes it goes down. So it's normal to see sales and earnings going down from time to time. So the stock went from 186 to 140 during the fall of 23. And today it's back up to 199. So what to make of it? Absolutely nothing. I mean, seriously, if you invest for the long run, why would you care for 9 months worth of stock price fluctuation? There is no point here. And I know that you may be afraid of losing money, but you're going to lose money if you press on the panic button. You will lose money if you don't know what you own and why you own it. You will lose money if you don't understand a business model and you don't get that a bad quarter could happen, and if you're not able to explain it and rationalize the impact of those numbers on the real value of the business. This is how you end up losing money. If you want to know more about strategies to buy or sell stocks, we're going to tackle those two topics this Thursday in a free webinar. You can go on moosemarkets.com/webinar or go in the show note. It's there as well. 1 p.m. Eastern time, I go live. I will present you all my tricks to buy in this crazy market at a all-time high and all my tricks to get rid of not just a loser, but when it's time to sell your winner as well. So all the tricks to buy, all the tricks to sell, get rid of that struggle, get rid of that paralysis, start taking action. moosemarkets.com/webinar. I will answer all your questions. I usually answer questions for an hour live. And if you are not able to make up for the live event, you can still register to get the free replay, because if you don't register, you're not going to receive the replay. So again, moosemarkets.com/webinar. You go into the show note. We're going to talk about the buy and the sell struggles. Probably one of the most popular and tougher struggles to manage. And that's it. All right, Moose, we're going to talk again tomorrow. In the meantime, don't forget to stay invested.
Hey, welcome to the disclaimer. If you're listening to The Moose on the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.